Good morning or good day, wherever you are. Welcome to our global webinar, Real-Time Daily Trading Ideas. We have 5 days a week. We have 5 different traders. We will speak about trading ideas, strategies, market screen, maybe 1 or 2 questions from your side that will be answered in our webinar. Our goal is daily the same. Let's have a nice start like every day, and today it's Thursday, 20th of September 2018. We will start like every day with our disclaimer. Forex and CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. If you're a starter, please start with a demo account and make yourself familiar with long trading, short trading, leverage trading, and your personal risk management. If you'd like to read the full disclaimer, just visit one of our web pages, for example, admiralmarkets.com, and you will find everything written down there. Also, other information what you maybe like to see, like the key information documents, the kits, or everything is to find on admiralmarkets.com. Also, some information about the different offers for retail clients and professional clients. Since August 2018 in the whole European Union, there are different offers and levels of regulation. Retail clients can get a maximum leverage up to 30 for Forex. Professional clients, if they are eligible and apply for that, can still get a higher leverage up to 500. Sometimes a picture shows more than 1,000 words, and here we have even 2 pictures, DAX 30 and EURAD, 2 examples, the margin requirements. As a retail client, 600 euro. As a professional client, 24 euro if you choose a leverage up to 500. Of course, there are some benefits also for retail clients. Retail clients will get an unlimited protection against negative balances. Professional clients at some brokers like Admiral Markets, they have an additional protection up to 50,000 British pounds according to our negative balance protection policy. Also here, check all the details out, the trade-offs and the plus points via that link. It's displayed here on this webpage. This is me. My name is Jens. My English is made in Germany, so I'm the German guy from Admiral Markets. We are a big international broker. We have over 18 country offices, so I'm not the main speaker, but the main speaker is the day trader of today. This is our scheme. On Monday, it's Jay's day. On Tuesday, it's Paul's day. On Wednesday, it's Giancarlo's day. Like today, on Thursday, it's Markus' day. On Friday, it's DAX day. Our leading day traders live every business day, every trading day to the same time. And of course, if you like to trade Forex and CFDs, you'll get many benefits only with us. For example, DAX 30 or also EURAD, typical actual spread of just 0.8 pips or points during main trading hours without additional commission. Also here on admiralmarkets.com, you could find more details about that. Also, how to contact us, you can call us, you can send us email, or visit the other channels like YouTube or Facebook. Everything is linked from admiralmarkets.com. Thanks for listening to my introduction, and now it's time for the day trader. Good morning, good day, Markus. What's your view to the markets today?
Wonderful. Good morning, everybody. Thanks for your introduction, Jens, and greetings here from Frankfurt. Mine, I'm not at home. So just a moment. You need the right one. So let me see. Yes, that's the right one. So this is the right screen. You can see. Yes, welcome here to our webinar on Thursday. Yes, I guess you're missing the cam, but I'm in a hotel here in Frankfurt. I'm not at home, so you can only hear my voice this morning, and you see the screen. I think that's the most important thing. Okay, as the same procedure as every week for our automatism, success is not a fantasy, it's a formula, and we are watching the markets with that trading approach. We are trained trader outcoming of a correction. That's the most important thing. You see the highest probabilities are when the trend, the signal trend you want to trade, and the upper trend is running the same direction, then you have a probability of 72%, and I guess that's enough. And we have our rules. We have to hint about the first rule you need for every trade you want to make a valid trend. The correction has to be run at least 38% like Fibonacci, and the trend it has maximum the fourth trend arm. It's not so major, the trend. Then you have to wait of the rebounds, and you can see it if you use Heikin Ashi. That's an indicator. You can use it at Admiral Markets at MT4. Sorry, and yes, Fibonacci gives you the target, and we want to show it in the market right now. So let's see the market a little bit back. Look back at the trades we did in the last 5 days, and so let's see. That's our result. Come on. So let's, if you have used, oh, here we are. So we did 1, 2, 3, 4, 5 trades in the last 5 days. We prepared, you know, if you remember the last webinar, and you can see we had a profit factor from 4.38. So we had a lot of winners in the last few days, and you can see our approach. So trend trading, outcome in the correction is very successful. Of course, you have a loser. Of course, losing money is a part of trading, but mostly we made good trades. So the first one was in New Zealand Canadian dollar. You can see it. And we had this correction. There was our balance candle. There was the target. Boom, we earned money. But the second one, the second chance, we made a second trade here in New Zealand Canadian dollar as the same procedure, correction. There was the balance candle in, but there we stopped out. So, but that was a winner, that was a loser. And the next one, you can see in the row, US dollar against Japanese yen. Here we are. Here you can see it's always, that's so important in trading. You made a statistically profitable system, and trend trading, outcoming of the correction, the accumulation phase is very profitable on a long-term time frame. You see it, and you can see this is a trend. Here we had the correction, balance candle, in, out, earned money. That's Fibonacci. That's trend trading. And the last two, New Zealand Swiss franc. Here you can see the same one, movement, correction. Here was the balance candle in, Fibonacci retracement, out, earned money. Okay, the price rises up more and more. Doesn't matter. My target, my aim from the beginning to start the trend was to earn money, and I did it. And New Zealand, US dollar, the same procedure. You can see we had our correction. Here was the balance candle in, out, earned money. Great, great stuff. So you can use it with the expert advisor, or you can do it in manual. If you watch the market, that's your decision. So why I'm using this expert advisor, for example, because I want to save my lifetime. And of course, we have only one life, and you have to, I think you have to create your life as well as possible. So, and trading is not the most important thing in our life. So I prepared some new trades, and if you have some question about, ask me. Jens will give me the questions if we have some. And up to then, I prepared some new trading ideas for the next 5 days. And we will start with Aussie New Zealand dollar. And if you remember the slide, we want to make sure that the higher time frame is running in the same direction we want to trade. So, and here you can see, you have here this trend. I will show you more exactly. You can see we have here this trend, movement, correction, movement, and a little bigger movement. And now we had a stabilization here at this price, and you know, trend continuation is more likely than a trend break. So this is what the upper trend says, and now in the hourly chart we are looking for an uptrend now. Not yet, because you can see we are very far down move. Now we have to get a stabilization, and then maybe we will have here a new uptrend, maybe in this kind. So this one maybe, then we can make our long trade. So we need to be patient, stay on the sideline, put it on your watch list. You can find the expert advisor on my homepage, dowhow-trading.com. Let's repeat, you will find it on my homepage, dowhow-trading.com. There you can get a trial version for 40 days. So the next one on my list is the DAX. I guess the DAX is really important for a lot of traders. And here is a little bit analysis. You can see it's a short trend. It's a really big short trend, and the expert advisor painted here. You can see it. Now we are a little bit in the correction. You can see it, and yes, let's see a little with the Fibonacci. You can see it here. So now we have 50%. We have space for the 61% Fibonacci. And if we will see here rebounds, maybe in this price area, then the trend is facing downwards, or maybe we will see the next continuation to the lower side. As long, and that's important, ladies and gentlemen, and that's really important, as long as it doesn't leave this point here to the upper side. Here is the border of, here is the end of the uptrend, for the downtrend. This is the point 3, this is the correction point. As long as it doesn't leave this point 3 to the upper side, a trend continuation is always more likely than a trend break. When we will see here a close, then we must assume that we will see the next up move. But not yet. As long as the price doesn't leave this zone to the upper side, we will see a trend continuation to the to the short side. And that's the reason why I'm looking at the hourly chart for a short trade. So not yet, you can see, wow, we are on a long move here. And yes, we will see maybe this in the next hours or 1, 2, 3 days, I don't know. But maybe if we will see this one here, and we will see here in the next trend, you can make your short trade. Oh, so put it on your watch list. It's a little bit early, but that's a preparation for the next days, the DAX. So euro against Aussie dollar. Where is it? Here we are. You can see it's a long trade. Why? Because you could look at this one. You see here, let me paint it for you. You can see this up move, correction, up move. Now we are in the correction, and maybe we will see a more decreasing here to this point too. But as long as it doesn't leave this point to the lower side, and I guess we will see here about the volume, we will see here stabilization, and then we can go up. And this is the reason why I'm looking in the hourly chart for the next uptrend. Not yet. You can see we are a little bit in the short, but as we will see here the rebound or creation of a new uptrend. So this one, maybe movement, correction, movement, correction, and then we can go up. That's the reason. In combination, always, and that's so much important, always in combination with your upper trend. And I told it yesterday in the evening webinar. We talked about the highest, how much important is the higher trend. Maybe Jens will upload it on YouTube and you can repeat it there, what I told yesterday to the attendees of the yesterday's webinar. So euro against Aussie dollar, put it please on your watch list for the next few days. Then we have New Zealand Canadian dollar. It's the same procedure as last week, because we are still in a great situation. You can see it here. The first, we have a big divergence here. You can see it, lower low, but a higher low in the RSI. That's one of the most technical, strongest, powerful signals you can have, but in the upper trend, not in the signal trend, only in your upper trend. And then you can use it for your own trading in the hourly chart. And you can, of course, you can use the same procedure, the same behavior in day trading. So maybe you will make trades in 5 minutes, then it's the hourly chart, your higher time frame. So make sure that the higher time frame is running in the same direction, always support you with divergence, with trend trading, and then you can make it in 5 minutes. This is what we do every week in my trading education service, Now How Trading. Okay, here you can see we are still, or we are already in an uptrend, in a stable, in a valid uptrend. Now you have to wait. You have to wait to the next correction, and then our rules. You have to recognize our rules. Trend, yes, we have a trend. We need a correction, at least 38%. Do we have? No, not yet. but maybe in the next few hours. And then you need the balance candle as a sign that the correction is coming to an end, and then how far you want to move in the correction, sorry, the far is like Fibonacci, the target, red to red, blue to blue, green to green, and so on. You know it already. So that's maybe New Zealand Canadian dollar is maybe the trade or the opportunity with the highest probability that we will have in the next few hours or 1 to 3 days. And New Zealand Swiss franc, New Zealand, here we are. Look at this one. It's a great, it's similar like New Zealand Canadian. You can see here the bottom. Here you can see the bottom. Let's see here. Here's the bottom, and the bottom is encouraged through a divergence here in the RSI. A great opportunity, and additionally, you have a lot of space to the next. To the last correction zone. This space we can use to make 1 or 2 trades in the hourly chart. And at least the highest volume, the point of control is placed here. So we have a lot of space, and the price has the behavior to go back to the point of control, to a level where the price has the best value. So New Zealand Swiss franc in the hourly chart, you can see we are in the, let's see, we are in the in a valid uptrend, and now you need, what do you need? You know it, you need the correction. You need the correction. That's wrong. You need the correction, and you need it. Do you remember? At least 38%. Then you need a balance candle like Heikin Ashi, and then you can make the next trade. Maybe we can do it in the next few hours, or maybe this afternoon or tomorrow. Maybe it's a great opportunity. New Zealand dollar, Swiss franc, and last but not least, New Zealand Canadian dollar. And here we are in a special situation. So let's see the long. Yes. So we have a little bit bigger trend. You see, movement, correction, movement, and now the correction back, very interesting, back to the point of control here. There was a price level, the best balance of supply and demand, and now we will see the rebound here. Maybe, of course, maybe it's only probabilities, no safeties, no securities. It's only probabilities. And now if we will see here the stabilization of the point of control, we will see the rebound here and the continuation of the trend in US dollar, Canadian dollar. And this is the situation in the upper trend, the support of the upper trend. And then you can switch to the hourly chart. And now you can see at the bottom, the building bottom. And look at this one. It's a really interesting place. Look at this one on this side. Look here, a great bottom, and you can see the point of control is up, is above of our situation here, and now we have to wait. Now we have to wait of the next trend, maybe this one, and then you can make your uptrend in this situation. I guess US Canadian dollar is a great opportunity for the next 1 or 2 days, and so put it on your watch list and be patient. Really be patient. How does the balance candle look like? Oh, I can show you. Let's see. A balance candle looks like this one. That's the great stuff in Heikin Ashi. You have only 2 kind of candles. First, this is a trend continuation candle. So you have a big body and a big shadow. In short, on the lower side, and on the upper side, you have this one. And a balance candle shows the balance of supply and demand, and it's a great sign that either the movement or the correction is coming to an end. And you can see this is a great balance candle. You see a really small body and a long shadow on the upper and on the lower side. That's all balanced candles, all a little bit more body, but that's all balanced candles here. And this is a great sign that here's a high volume, that is here are here's the balance of supply and demand. And this is a sign that we will find here, or we are here in a bottom, here in a bottom building. And this is the best sign. You can see it here in the bottom building. And now maybe we have here the opportunity that he will create, we can create here a new uptrend. And you can see an example here on this, here you see we have a little bit closer. Let's see, look at this one. It's very important, it's really important because it's easy to see. You can see trend continuation candle, a big body and a shadow on the upper side, a big body, trend continuation, and then the last one, body, candle on the upper side, and then after the move, you can see balanced candles. A bottom in the middle, a small bottom, and a shadow on the upper and the lower side. That's a great sign because it shows you what is happening in the order book, the balance of supply and demand. And you see it's a sign that the move is coming to an end. We will see a rebound and at least finally the next correction. And that is always the same. And we use it for our trading approach. In a valid trend, in the correction, you have to wait for the balanced candle and then put your stop order or your buy or sell stop order in the market. So that was my view on the market, and I hope you learned a little bit about that. And thanks for your lifetime for me in this webinar. Thanks for your attention. And with this, I wish you a wonderful, great rest of the week. Enjoy the sun, enjoy your life, and take care. And with that, back to Jens.
Today we are done, but we have 5 days a week and 5 different traders. So if you like our webinars, join us tomorrow to the same time. 5 days, 5 traders, 5 trading styles. That was Markus today. Greetings from Berlin office. My name is Jens, and all the time, good trades.